They actually agree that most investors would actually take in profit at the moment, because really if you look at the market, it's appreciated by about 11.5% since the beginning of the year. And like you had mentioned before, a number of banks still have some margin stocks in their portfolios, and they actually wouldn't mind taking profit right now at this point in time, because prices actually are quite decent right now compared to the levels they were in November and also in September. And also other investors as well are taking profit, because you also mentioned that Diamond Bank, for example, and even Sky Bank had appreciated by about 40%. So really most investors are currently taking profits at this time.
Banks are really feeling the brunt of this and under pressure. I mean, but we're seeing contracted volume, and volume falling back 47% in yesterday's session. And what's interesting is that the interest we did see come into the banking sector has come from foreign institutional players. Is that something worth noting, that foreign institutional investors are showing interest in the banking sector?
Yes, I think so too, because really if you look at the Nigerian banking sector and compare them on a price-to-book basis to other foreign banks in some emerging markets like in Turkey or even in South Africa, for example, we are still trading at a significant discount compared to them. And also the current reforms in the banking sector as well as increased investor interest, and most foreign investors are quite interested in the sector right now because they've also been improved disclosure. And going forward, we expect to see better risk management also in the bank. So overall, really would expect a better banking sector going forward. And I think that's a major reason why foreign investors have been interested in this sector at this time.
As a local investor watching the markets on a daily basis, where exactly are you looking right now?
For me, I'm still looking at the banking sector, because really I believe, even though in 2009 we'd expect we really won't expect a good performance in terms of their results, because most of them had to make huge provisions in 2009. But for 2010, actually we'd expect a better result. And for us, in terms of PEs, we expect the PE average for the sector right now, forward PE for 2010 is currently about 6 times earnings. So for me, I'll still look at banks like GT Bank, for example, still quite attractive if you are looking at 2010. And also First Bank still looks quite decent as well. And outside the banking sector, I'll still look at Dangote Flour, for example, and also flour mills. Both of them are still trading at a significant discount to their sectors. They're both trading at about 6 times PE, while the industry is about 12 times. And so for me, I think those companies are also quite good to look at this time.
That sentiment shared by the broader market on Dangote Flour. We saw that stock increase 4.9% in yesterday's session, and was the only major food and beverages counter that actually closed in the green, withstanding the persistent offer volumes coming in mainly from locals. Let's take a look at the building and materials industry. I mean, we've seen that industry proving to be pretty resilient. It's gained 21% since the start of the year and is certainly getting attention within that space. Ashaka Cement and CNN standing in the spotlight there. What's your perspective on those counters?
Yeah, CNN is actually a stock that I think you should look at right now, because there was a big investment in the company last year. BOA Group bought a majority stake in the company, about 50% into the company, and plans to expand the company from about 0.5 MT to about 1.25 MT. And if you also consider the fact that there's lots of infrastructure development going on in the country right now, there's still a huge demand for cement, and there's actually a huge demand supply gap. So really, I think it's a very good sector to look at. And the fact that the company is currently expanding to try and meet up that demand shows that it's really something worth investing in.